Okay, so you wanted to get up to speed on Veralto, right? And specifically their latest earnings call.
Their Q3 2024 call.
Exactly. Yeah. So we did a deep dive into that transcript, and let me tell you, there's some pretty interesting stuff in there.
Oh, absolutely. I
Yeah.
think people are going to find this one pretty fascinating.
Yeah, I think so. So for anyone who needs a quick refresher, Veralto's a global company. They're all about those essential services that we kind of take for granted. Clean water, safe food, that kind of thing.
Yeah, very much focused on sustainability and, just making sure that those essential needs are met worldwide.
Right, exactly. And with everything that's going on in the world, with resources and climate change and everything, it seems like they're really well positioned for the future.
Absolutely. There's definitely a growing need for the kinds of solutions they provide.
For sure.
Mhm.
So our mission today is to really break down this earnings call, extract the key takeaways.
Mm.
What did they say about their performance, and what does it all mean for their future?
Sounds good. Let's get into it.
Okay, so the call took place on October 24th, 2024, and the key speakers were Ryan Taylor, who's the VP of Investor Relations, Jennifer Honeycutt, the CEO, and Samir Rulhan, the CFO.
A real power trio.
Right, and one of the first things that jumped out at me was this 4.6% growth in core sales.
Yeah, core sales, that's always a good starting point. It basically strips out any unusual events or one-time items, so it gives you a really clear picture of how the core business is performing.
Right, so it's like the true underlying growth of the company. And 4.6% is pretty solid, don't you think?
Oh, yeah, definitely, especially in this economic environment. And what's even more impressive is that this growth is coming from both volume and pricing.
Right. It's not just that they're selling more stuff, but they're also able to charge higher prices, which suggests there's strong demand for what they're selling.
Exactly. It shows they have pricing power, which is always a good sign.
Yeah, for sure. So looking at the breakdown, volume contributed 2.8% to that growth, and pricing contributed 1.8%. So a nice balance there.
Yeah, definitely. A well-rounded performance.
Now, one thing that the leadership team kept coming back to was this thing called the Veralto Enterprise System, or VES, I think they call it.
VES, yes. It's essentially their operating system. It's the way they do things at Veralto.
Okay, so it's not like a specific software program or anything. It's more like a philosophy or a framework.
Exactly. It's a set of principles and processes that guide their operations. Their focus on growth, operational excellence, leadership development, all of that stems from VES.
Interesting. So it's kind of like the secret sauce that keeps them ticking.
You could say that. It's definitely a key part of their success.
Now let's talk money. Let's get into the nitty-gritty of the financials.
Let's do it.
So their adjusted operating margin jumped by a whopping 170 basis points to 24%.
Now that's impressive. It means they're becoming more efficient at converting revenue into profit, which is great news for investors.
Okay, can you break that down for us a little bit? Like, what does an adjusted operating margin really mean for the average person?
Sure. So imagine you're running a lemonade stand.
Okay, I love lemonade stands.
Me too. So you sell a cup of lemonade for $1, but it costs you 50 cents to make that lemonade, right?
Right, lemon sugar water.
Exactly. So your operating margin would be 50 cents because that's how much profit you make on each cup after you subtract your costs.
Okay, that makes sense.
So in Veralto's case, their adjusted operating margin is 24%. That means for every dollar of revenue they generate, they're keeping 24 cents as profit.
Got it. So the higher the margin, the better.
Exactly. It shows they're running a lean and efficient operation.
Okay, so that's adjusted operating margin, and their adjusted EPS climbed to 89 cents, which is a 19% jump from the previous year.
Right. So EPS, earnings per share, is another key metric for investors. It basically tells you how much profit the company is making for each share of stock.
Okay. And why is adjusted EPS important? Like, why not just regular EPS?
Well, adjusted EPS excludes certain one-time or unusual items that can distort the picture, so it gives you a more accurate view of the company's ongoing profitability.
Interesting. And what about free cash flow? I always hear about free cash flow, but I'm not really sure what it means.
Free cash flow is essentially the cash that's left over after the company has paid all its bills and invested in its operations.
Okay, so it's the money they have available to do other things, like what?
Like pay dividends to shareholders, buy back their own stock, make acquisitions, invest in new technologies. It's the fuel that drives growth and creates value for shareholders.
Got it. So Veralto's free cash flow was $215 million. That's a pretty good sign, right?
Absolutely. It shows they're generating a healthy amount of cash, which gives them a lot of flexibility to pursue their strategic goals.
Okay, so let's shift gears a little bit and talk about their regional performance.
Sounds good.
So they saw pretty solid growth in North America, up 5.5%.
driven by continued strong demand in water treatment, which is no surprise given the aging infrastructure in many parts of the country.
Right, and all the concerns about water quality.
Exactly.
But what really caught my eye was the nearly 10% growth in Latin America.
Yeah, Latin America is a key growth market for them. They've been making strategic investments in the region, and it seems to be paying off.
What kind of investment?
Well, they've been expanding their sales and service network, building new facilities, and really tailoring their products and services to the specific needs of the Latin American market.
That makes sense. It's not a one-size-fits-all approach.
Right. Every region has its unique challenges and opportunities.
Now, on the flip side, their performance in China dipped a little bit by about 3%.
Yeah, that's something to keep an eye on. Could be a short-term blip, or it could be a sign of bigger challenges in the Chinese market.
What kind of challenges?
Well, the Chinese economy has been slowing down a bit. And there's also increased competition in the water and food safety sectors.
Yeah, interesting. So it'll be interesting to see how that plays out in the coming quarters.
Absolutely.
Okay, so now let's talk about something that's pretty exciting. I think Veralto's acquisition of TraceGains.
Yeah, this was a big move for them.
Can you remind us what TraceGains does?
Sure. So TraceGains is all about helping food and beverage companies manage the complexities of regulatory compliance.
Okay, so like food safety regulations and things like that.
Exactly. It's a huge and growing market.
Yeah.
And Veralto sees a big opportunity to expand their reach in this area.
That makes sense. It seems like they're really building a comprehensive ecosystem around food and water safety.
Right. It's all about providing end-to-end solutions for their customers.
And they're expecting to generate some significant synergies from this acquisition. Can you explain what that means?
Sure. So synergies basically refer to the cost savings and operational efficiencies that they expect to achieve by combining the two companies.
So it's not just about adding revenue, it's also about becoming more efficient.
Exactly. And that's ultimately what drives profitability and shareholder value.
Right. So looking ahead to Q4 2024, Veralto is forecasting low to mid-single-digit core sales growth.
So they're still expecting growth, but maybe at a slightly slower pace than what we saw in Q3.
And why is that?
Well, they cited a few factors, like tougher comparisons to the previous year and some operational adjustments related to the TraceGains acquisition.
So they're basically saying that Q4 of last year was a really strong quarter, so it's going to be hard to beat those numbers.
Right. And integrating a large acquisition like TraceGains always comes with some challenges.
Makes sense.
Right.
But they did raise their adjusted EPS guidance for the full year to 3.44 to 3.48 per share.
Yeah, so even though they're expecting slightly slower sales growth, they're still confident in their ability to improve profitability.
Okay, so it sounds like they're striking a balance between growth and profitability.
Exactly.
Now, during the analyst Q&A session, there were a few key themes that emerged.
Yeah. Analysts were really interested in things like the competitive landscape. You know, how does Veralto stack up against its rivals?
Right, and what about their future growth expectations?
Yeah.
Especially with the TraceGains acquisition.
Exactly. And there were some questions about the ongoing recovery in the consumer packaged goods sector and how that might impact Veralto's business.
So what was their take on that?
Well, they seemed pretty optimistic about the CPG recovery. They said they're seeing signs of improvement in demand, and they expect that trend to continue.
Okay, so that's good news for Veralto.
Yeah, absolutely.
Now, one thing that really stood out to me was their emphasis on disciplined criteria for acquisitions.
Yeah, they made it very clear that they're not just going out and buying any company that comes along.
Right. It has to be the right strategic fit.
Exactly. They're looking for companies that can enhance their existing offerings, expand their market reach, and create long-term value for shareholders.
So they're not just chasing growth for growth's sake.
Right. It's all about sustainable, profitable growth.
Makes sense.
So what do you think? Is this a good sign?
Yeah, I think so. I mean, it shows that they're being thoughtful and strategic about their acquisitions. They're not just throwing money at every shiny object that comes along.
Yeah.
It's like, they're being disciplined.
Exactly.
Okay, so to wrap things up, what's the big takeaway here for our listeners?
Well, I think the big takeaway is that Veralto is a company that's firing on all cylinders. They're growing their revenue, expanding their margins, generating strong cash flow, and making strategic acquisitions to position themselves for the future.
Right. And they're doing all of this in a market that's only going to become more important in the years to come.
Exactly. Clean water and safe food are essential needs for a growing global population, and Veralto is at the forefront of providing solutions to meet those needs.
Absolutely. So if you're looking for a company that's tackling some of the world's most pressing challenges and doing it in a way that creates value for shareholders, Veralto is definitely worth a closer look.
Yeah, no doubt about it.
So we'll definitely be keeping an eye on their progress. But in the meantime, you can always check out their investor relations website for more information.
Always a good resource for investors.
Okay. Well, that's it for our deep dive into Veralto's Q3 earnings call. Thanks for joining us,
Thanks for having me.
and we'll catch you next time.
See you then.